So this is the system which we have developed, and a demo of the same has been given. So in this presentation, we would like to see how the utility is there. The trend is down since 27th of April 2022. So this is specifically for those traders who don't want to indulge into playing the volatility but want to play the major trend and does not want to be a participant on a day-to-day basis and more like a major swing trade. This system does not give you the reversals. The reversal mechanism is not part of this particular systematic outlook, but more for the trended play to get the maximum what you can get in particular over a period of time. So it's basically for the rolling mechanism. Those who want to take the biggest move over here was from July 21, and every month you had to roll it if you want, and then there is an exit in terms of a few logics. One is that if you are a very conservative, you don't want to take, or you are doing any multiple lots, and these dots are an alerts where if you want you can take profit. Second would be when this particular stop loss line gets triggered on the closing basis. This is a bar chart, so we will check on the closing. If any of the bar charts gets on the closing, you may actually end your position if you want, and finally it's there when there is going to be a change of trend. Okay, so you have to roll it over and get the maximum benefit of the trend. When the market becomes excessive sideways or excessive volatility, you may not have the biggest of the range but smallest of the range you can get it, because we are inbuilt into the system the target mechanism, which will help you to at least have a minimum kind of a profitable situation. Now how do you trade it? Now once you have not taken a position in on this particular day, or at, we will have a stop loss mechanism as well. In this the when the position is started, your stop loss would be as shown over here, the red sell price of 17055 on 17055 on 27th of April. That was the sell price. and the red stop loss for this particular position when you started was 17,321. So this trailing stop loss is only you should utilize it when you start making profits. Otherwise, you would start off your positions with the original stop loss, that is one original stop loss, that is 17,321, as in the case as it is shown here, and or you would wait for the green to happen after the red. So green to red is the first signal. Green to red is the first signal. Uh, so green to red is the first signal, and that's where you have to create position as long as your stop loss is not triggered. Okay. So there will be some exceptional cases that there will be a stop loss violation, but still it will be red. So you can continue to get back into the same cell once again. But in this situation, it has been in a downtrend. There is a diamond marked over here, which also indicates that there is an oversold exit. So anyone wants to take profit, they can take it. So oversold and overbought generally are supposed to be helpful for identifying the reversals. So you can see over here the demand zone already there. So obviously that logic is not part of it. That is a part of more about the analytical situation, and there are some other systems which have been developed which will be focused more on the reversal part rather than the trended part. So reversal. So right now we are on the trended system, where we would like to have a rolling mechanism where we can roll the position and do less number of trades in a year and try to get the maximum number of points into consideration. So now once my position is there but it starts falling, I don't have a position. So now if I have to get in, then what do I do? So I have to, this is a daily chart, so I have to flip my chart first on the 60-minute chart. So I flip my chart to 60-minute chart. So now if there is an uptrend on any of the 60-minute chart, the logic over here is probably to be part of the major trend. So in that case you will wait for your sells. Yes, there will be a green opportunity, but those are the standalone basis trades where you can take a long and then take profit and so on. But what right now I'm trying to explain is that we would like to be part of the major trend. Like right now if I talk about daily chart, so this is the major trend on the part of the daily chart. So I would like to see that this daily chart, I would like to be a part of it when there is a sell in it. I might not be a part of it when the long trade is going on the 60-minute charts. Now what happens is that if you have not taken a trade on 7th of June and you are somewhere about here, but still you have not taken a trade, now what do you do? So again you flip back hourly to say 30 minutes. So 30 minutes sell, we will only look at the sell. So this was on 6th, again I am not in a position to get my sell, so I flip to 15 minutes. Now 15 minutes gave me a sell on Friday at morning at 9:50. So if that has given me a trade, now the my sell price is already shown here. Now on a 15 minutes the sell price was 16,279. My stop loss that time was 16,321, and I'm looking at the downside from this particular position is 16,239 to 16,179. So either so moment I drop down below 60 minutes, it's going to be intraday. It cannot be for to carry position. So now once again if I don't get on 60 minutes, then I will have to drop down to say 5 minutes chart, because 15 minutes and 7.5 minutes. So 5-minute charts. Now 5-minute charts also on Friday gave a sell simultaneously with the 15 minutes chart. So this landed up with an intraday trade, not for a positional trade. The positional trade actually started for a rolling mechanism on this. So you have to wait for your chances to get into that position of playing a positional play for rolling mechanism. If you don't get, then it will be a shorter period, so you cannot go in for at any price for a rolling mechanism, because there will be volatility. So trends new signals, new positions of respective time frame always starts when there is a new signal. So because the trend is already down and I don't have the opportunity to get into because it's a falling trend, so I look down on a lower time frame to start off hourly. So hourly signal was on 6th of 7th of June in the morning after at 10 o'clock. So that was the position when it should have been taken a sell, and then you are holding on to the position. So anything less than 1 hour chart or hourly chart will go automatically in intraday. So it's not feasible enough to have a rolling position with that uh, rolling position with that. At least in hourly, when you can at least have a couple of days straight, few days straight at least. So depending on, I can see this signal has lasted for 3 days. This green obviously will not be a participant of that, but 1 2 3 4 5 6 days. Okay, so at least you have. But when you go on to still a lower time frame, there you are exposed to the higher risk of the gap up gap down, which can distort in the lower time frames. In the lower time frame, the signals can get distorted because of the gap up, excessive gap up gap downs, which might disturb your trend or which disturb your position. So anything less than that would be purely intraday. So you need to deal with it with intraday. Next day you come up and wait for a lower time frame signal again. Now this position is covered. So now tomorrow, if we are playing for a 5 minutes on a Monday, then I will have to wait for the next sell, which will be coming in for 5 minutes. Okay, so you might have an uptrend on a 5 minutes and you can see a pullback rally tomorrow. That is about 13th of June. You might find market gap down because of the SGX closing which slightly weaker at 16,050 areas approximately. So you might find market gapping down to 200 points down because Nifty June had closed somewhere in the area of 16,240-50 area approximately. So 16,200. So you might see the gap down. So but now in that case you'll have to wait for the 5 minutes, but you have to start off with the positions on new so that you can have. So every position from here you always have that opportunity. Like this particular daily chart positional trade had a target. Let's see what happened. 617 to 69 was this buy signal, and you need to be buying over there, and you are looking for upside. So upside targets are meant to have profit locking basically. So when there is a big trend, when there is an oscillating trend, it is fine, you take a profit, you will be happy. But when there is a trended part or when a big trended swings happening, targets would be just to lock profits, and later on you will have to utilize the red line, which is the trailing stop loss line, TR, which I have called here. It's a trailing line, so you need to trail or you take profit and be satisfied with the profit, and then go on to the lower time frame and try to check the signals for re-entry in a 1 hour chart. So those who are doing multiple lots, say 2 lots, you would probably have one position rolling out and another position trying to play the volatility. In that case, then we drop down to the hourly chart and try to find a new signal in the hourly chart. When it comes, you execute that time itself. Don't execute when there is no signal in the hourly chart. Okay, so we want a new arrow irrespective of loss or profit, and then if you don't still get it, or you are in the between of the hourly downtrend, then we drop down to 30 minutes. If you still don't get it, you drop down to 15 minutes. If you still don't get it, we drop down to, so as a result of which you are also controlling your risk and minimize the damage which can it do to you in case of excessive volatility or the trend reversals happening not as desired. Okay, or the trend not happening as per your thought process. So that is what we are seeking in this particular video, and thank you for watching it.